Okay, girls, this is this question number 18 in my textbook. This is the same question that is solved there. The question reads, A and B are partners in a firm sharing profits and losses in the ratio 3:2. Their capitals are rupees 1,80,000 and 1,40,000 respectively. They admit X in the partnership. They are old partners, 3:2. Their capitals have been given to us 180 and 140 respectively. They admit X in the partnership on the conditions that he will bring 67,500 as his share of goodwill and 1,50,000 as capital and 1/4 share of, and he will get 1/4 share of profits. 1/4 share of profits he will get. Now, assuming that the capital and goodwill have been brought in cash, that is an assumption. It is the entry I told you, it is not paid privately, it is as an assumption. It is not clearly given here. When it is not paid, see, when it is not mentioned that it is paid privately, as long as where privately is not mentioned, this assumption is taken that the goodwill was brought in cash by the new partner. You have to pass the entries and find out the new ratio between the partners when goodwill is retained in the business and when goodwill is withdrawn by the old partners. Okay, let us proceed now. The first thing is here calculation of new profit sharing ratio. See, now he was given 1/4 share. This new partner comes with 1/4 share. That means after giving his 1/4 share to the new partner, the share left for the old partners is 3/4. 1 minus 1/4 is 3/4. So A's new share 3:2 was the ratio. That means A ka share is 3/5. But now 3/5 of this 3/4, 920 हो गया. B's new share will be, it was 3:2, 2/5 था, but now 2/5 of 3/4 share. So it is 6/20. So X's share is 1/4. वो था ही, तो रेशियो क्या हो गई 9:6:5. 1/4 का 5/20 हो गया. So 9:6:5 is the new profit sharing ratio. Now we come to the accounting treatment. Sorry. The accounting treatment. First is the first entry I told you, bank to X, the amount that is brought, bank to the cash to premium of goodwill किया था, the amount that is brought in cash. So bank to X for the amount he gets. This is the amount of goodwill and this is the amount of capital. What he gets in capital is to his capital. X means X's capital account. Bank account, the total amount. Excess capital account for the goodwill, for the capital, and to premium for goodwill for the goodwill that is brought. The goodwill is 67,500, very clearly given in the question. This goodwill, now capital तो आगे business में, capital को ignore. The accounting treatment is for goodwill. This is the goodwill that is brought, cash to premium for goodwill. Ab this goodwill will be distributed among the old partners in sacrificing ratio. Premium for goodwill to A to B in the sacrifice ratio. We have calculated sacrifice ratio. If not, nothing is given. The new ratio and sacrifice ratio are equal, 3:2. Now this goodwill has been calculated, distributed, and then it is said, the last line said that they withdraw. In case it is withdrawn, अगर नहीं withdraw करना तो this is the end, then we do not distribute. In case they withdraw, A and B are credited when they get something, and A and B will be debited when they are taking away this capital. Bank account, the amount of goodwill is going from the business. A's capital account, A's goodwill. B's capital account, B's goodwill, and to bank account for the total amount of goodwill that is withdrawn. Girls, the case also may be that this is the goodwill, 40,500 is the goodwill that is given, and then as he withdraws only one part of it, only 50% is withdrawn by the partners. In that case, ये entry तो पूरा इस amount से होगी, but this entry of withdrawing A and B to bank will be with the 50% amount. इसका 50% कर देंगे, 20,250. This is the amount that he will withdraw, and this is the amount that he will withdraw. 26 इसका कर देंगे 13,500. That is the amount that he will withdraw. the total amount that is withdrawn, 50% of 67,500, this will be the entry. Are we clear? This is the case when the premium is brought in cash and retained in the business and distributed. That means first entry of bringing the cash, bringing the premium of goodwill in cash, second entry of distributing, third entry in case it is withdrawn by the old partners.